back to the podcast. I'm the host, Sean Boyce. I'd like to welcome my guest to the show today, Stein Smith, who is the assistant professor at Lehman College. Hello, Sean. How are you? And welcome to the podcast.
Doing well, Sean. Thank you for having me.
Yeah, I'm super excited to have you here. We had spoken last at the Engage conference in Las Vegas, obviously a huge finance and accounting conference that takes place every year. We talked a lot about where your area of expertise and in particular your specialty is at the moment, and which has been for quite a while now in blockchain and crypto space and all things developing in industry. So I'm super excited to dive into all of that and hear from an expert. However, before we get there, what would be great is for our audience to become more familiarized with you, to hear more about your background and how you got to where you are today. So if you wouldn't mind, please share with us.
Absolutely, Sean. And so I'd say prior to my transition to my current role in a higher education, more of a corporate training type of role, I have a background in corporate accounting and corporate IT, where I was employed for about 9.5 years, doing the whole range of items, right, from budgets to IT upgrades, forecasts, bank recs, all of sort of the traditional roles. And then as I was actually finishing up my PhD research, and that was about the back half of 2015, I heard about this whole blockchain thing, this whole Bitcoin thing, and I was super interested in it at the time, but I was only able to really get into it at the very end of 2015 and early 2016. And then honestly, I've been hands-on ever since, right? I do a lot of corporate trainings, corporate consulting on the payment side, tax side, anything connected to trying to get blockchain or Bitcoin or other crypto assets to work for the enterprise, right? To work for entrepreneurs, and then also trying to educate folks working in corporate accounting, public accounting, audit, tax, corporate finance, how to best handle clients who are delving into the space. And so I've authored articles, books, and I have a weekly column at Forums where I write op-eds almost every single week on this whole ecosystems area.
That's an incredible amount of experience. I have so many questions. I imagine at the moment you're probably been kept pretty busy because it's been a very active space. I feels like for years at this point. But let's see, best place to start, I think, in case anybody who's listening in is less familiar with the blockchain or crypto space, can you give kind of an overview or a one-on-one, if you will, in terms of helping them connect the dots in terms of what it might mean and what activity might look like in accounting and finance?
Absolutely. So the best way that I have found to try to introduce a blockchain or crypto, right, to a newer entrant into the space is to almost think about blockchain as it's a decentralized, shared record of transactions. Okay, part one. Part two is it's a traceable, transparent, and unable to be altered record of transactions. And so on those points, it has an incredible, or it is going to have and is having an incredible impact on anything to do with audits, attestation, or even income tax filings, right? Because if a entity, right, be it large, tiny, nonprofit, for-profit, whatever, if that entity has access to a transparent shared record that is unable to be altered and it's updated in real time, then all of that basically then opens up the actual door for a whole bunch of other activities, be it real-time auditing, real-time tax collection, and having that optionality to then go in there and to pop the hood and to actually gauge and judge how the entity, how the business is how it's interacting based on current policy changes, either inside the company or outside. And then adding on to that, right? So I probably always like to start with Bitcoin as the easiest introduction, right, to this whole crypto asset space, which is Bitcoin and a whole host of other assets out there. But as far as Bitcoin goes, it is an application running on top of a underlying blockchain. Okay, so basically, if the internet has applications like Twitter, Instagram, TikTok, all the rest, blockchain also has applications like Bitcoin, NFTs, non-fungible tokens, and other assets like that. And so obviously Bitcoin, it obviously is a highly volatile asset class, but the core traits here is that Bitcoin, it's a form of internet currency, right? That is unable to be managed, governed, or controlled by any one entity. And so it really is sort of the purest essence of what blockchain is actually trying to do, right? The whole point of blockchain crypto, don't forget, ultimately it was actually built to then actually take control, custody, and access out of the third-party institutions, including us, and to instead hand it back to the individuals and entrepreneurs trying to conduct transactions and to share data on a true peer-to-peer basis.
An excellent job of describing what can become a very nuanced and difficult topic that gets very technical very fast. The analogies are super helpful as well, also, I imagine, for others as well. I know a bit because a big part of my background is tech as well, also nowhere near as much as you do. But I have a couple of questions, and I'm thinking through kind of the best ones to ask so that our audience gets the most value out of this, our time together in this episode. And probably the next best one I would ask you first is where you see blockchain as a technology or infrastructure, crypto technologies as well, also either already having had or expected to have the biggest impact in terms of how it pertains to the industries of accounting and finance. Because fundamentally, right, I think a large part of the inspiration was to have as dramatic an effect on these industries as they probably can. But those are pretty wide ranging, right? So I'd love to hear your thoughts in terms of like what you've seen so far and what you believe is next.
Yeah, sure thing. So probably the two most direct impacts on corporate accounting, public accounting, audit, tax, finance is that one, it's a ton of work for all of us right now, right? It's a whole bunch of work for us to handle. And then two, right, that those obstacles and those questions are also in real time translating into opportunities, right? And so just a handful of the real direct world impacts that I've seen firsthand is that one, audits aren't going to become obsolete, but they are going to fundamentally change, right? Now, anybody who's ever been audited, been on an audit knows that one, they aren't fun. And two, the actual audit process is not perfect, right? There is no 100% audit, continuous audit, or any of those more aspirational goals, because one, having to manually go through and analyze every transaction, every piece of information is not possible. And then two, having access to that information in real time is also not possible until we've seen firms, be it in the finance and accounting side or our external clients, actually onboard in-house blockchains. And so the real sort of 1-2 punch that I've seen, and it's always important to have in mind that blockchain and crypto aren't perfect tools, right? They aren't magic items either. But I've seen the best applications have been blockchain with automation, right? Be it blockchain with bots or artificial intelligence or RPA, right? And so having this traceable, transparent, unable to be altered record that I can access in real time, combined with automation, that opens up a whole other world of opportunities outside of just audit, tax, compliance, right? Because as we all know, ESG is a tremendously hot area right now, and it's critical, right, for every company of every size. But how do you analyze? How do you quantify? How do you have access to all of that non-quantitative data, right? That sort of 1-2 punch of having a unhackable record of transactions and information combined with automation can honestly open up all of those opportunities. And then two, right, the other sort of bigger picture impact is that for firms who are trying to get out of just doing the traditional tax planning, tax filing roles, which all of us should be trying to do anyway, this whole rise of crypto investing, crypto holding, is opening up a whole new ecosystem of advisory opportunities around tax, right? Because don't forget the age brackets who are the most active buyers and holders of crypto are the two age brackets, which I won't name names here, but they are the two age brackets that are the 40 and under crowd, right? And so as these individuals become more entrenched in their career, acquire more assets, there is going to be a higher percentage of the wealth being invested to be allocated to non-traditional assets, including crypto. So on the one hand, there are current opportunities happening right now to expand the current work being done. And then two, as this ecosystem continues to become more mainstream, all of that is also going to open up other opportunities that are connected to, but actually build on our current roles.
Super interesting. I want to unpack that first component that you responded with in terms of marrying those technologies together, that being blockchain, especially combined with an automation, and the real power that lies there. For some of our listeners, I imagine they may be thinking, what might that look like, or what does that already look like? Can you give us a couple of forms of examples that may either already be in use or are coming, or just in theory, what that might look like, and how that's different from how these firms may be operating today with the technologies that they're currently using?
Absolutely. So a few of the more sort of concrete examples there, Sean, is one, right? The combining of bank recs, AR recs, payment recs, trying to automate that, right? Because anybody who has worked at any firm, I've been there myself, that at the end of the month, the quarter, the half year, you're trying to match up everything, your bank recs, your AR recs, and then the coordination with the folks over in AP, Treasury. That's always a headache. And a big part of that is not having one shared record. Okay, one shared record of who paid what to who when. Okay, so having a in-house blockchain or being a part of someone else's blockchain can help on that path. And then two, having access to all of this information in real time as it happens, right? So to having that record shared between all interested parties, combined with having access to analyze or to have insights created from it in real time, I mean, it's a great introductory sort of use case that I've seen quite a bit. And then probably two, what I've seen quite a bit of, and as another introductory sort of use case here, is inventory management. So be it more traditional inventory, be it cannabis inventory, which is forecasted to be $100 billion business, by the way, by 2026. So any of those industries, right, that have high value inventory that has to be managed actively, right? Be it jewelry, artwork, cannabis, drugs of all kinds. Having that one now up-to-date record shared by us, the firm, our clients, and our client suppliers, having that one common ledger so everybody knows who's up to date on what and then who has to reorder what as it happens is a great first step. And then two, having that up-to-date record is key for automation. And to just add some context there, Sean, right? There is endless ongoing chatter, right? About blockchain, about crypto, about RPA, AI, bots, automation, AR, VR, the metaverse, whatever. But in order to actually capture any of those upsides, right? And in order to have any of these automation tools, bots, or RPA or AI, in order to have those operate as advertised and to actually help us and to help our clients make better business choices, these applications and tools have to have access to up-to-date and correct information. And the only way to have, or one powerful way to have access to that complete and up-to-date and accurate information is to have that information stored on a blockchain. Now, I won't dive into the operational guts of the hows of that, but in order to have information on that blockchain in the first place, there has to be, at some level, some group approval of that data. So now I have data having been approved and authorized by the entities, by the firms, by the suppliers, the customers who are involved in those transactions. Now I have all of that information stored on a transparent, traceable, and unhackable record. And so then now I can really start to leverage the opportunities of automation, right? To have access to it in real time, to have real-time analytics, and to then, adding on to that, ultimately help us as advisors, help our clients sort of get more real-time analytics, and then adding on to that, help them actually have more time to focus on the going forward picture as opposed to going backwards.
Super interesting. Yeah, you make some excellent points about, I think, how people think of modern technology and especially updating older, obsolete, archaic systems and wanting to leverage, technology and automation. It's really difficult to do if you don't have the infrastructure for it. So a lot of what you're talking about is like the foundational elements enabling kind of the real outcomes that you want to get to. There's a lot of steps you just can't skip. And blockchain makes a lot of this possible because a lot of these things inherently are built in or it's incorporated by design, right? So now all of these possibilities are real if you're leveraging the technology, which fundamentally covers those bases, which previously may not have been something you had access to, right? Because it just wasn't designed in from the beginning. So I would also love to hear you talk a little bit about where you've seen some of the best examples of the technology being applied in industry, some of the more popular use cases in companies and things like that. Like I know I've read some fascinating case studies about like what Walmart and institutions like that have done with blockchain, which is super interesting, which really I think help connect the dots for a lot of folks too, to get a better understanding. I mean, in accounting and finance and accounting in particular, I think it's a little bit easier because terms are being thrown out like ledger, right, which make a whole lot more sense to accountants than they do probably to a lot of other folks. But in terms of where you've seen some of the most interesting applications of the technology in terms of moving things forward in industry, I'd love to hear from you. What are some of your favorites?
Sure. So I'd say probably the example that is oftentimes sort of trotted out is the IBM partnership with Walmart to basically trace and track any of their fresh produce that is ultimately being sold at their stores, right? But there are a handful of other really interesting applications. One, anything to do with any food transportation, right? Because all of us have heard of the almost endless outbreaks of illness linked to food. And so having those insights to be able to trace from point A to B to C in real time where the illness popped up, right? Having those real-time analytics is critical going forward. And then two, now I do know everyone's tired of talking about vaccines and shots and boosters. I get it too. But having access to that information, who is dosed with what, where, when, how much, all of that is a ongoing fact that has to be dealt with, right? And there are some real interesting use cases. I know IBM is actively trying to get a COVID vaccine passport up and running. Don't know the current state of that, but all of that is ultimately a application of blockchain that is going to be here going forward. And then adding on to that, one sort of more headline-driven one, but the whole idea of trying to operationalize the blockchain for healthcare, it's a tremendous problem that's oftentimes overlooked, right? That there are billing errors, treatment errors, medical errors that happen every single day that cause physical harm and economic harm. So having those sort of real use cases where ultimately, right, the best way to advertise or to get people to buy in, be they entrepreneurs, institutions, policymakers, to a technology being mainstream, is to show how the tool itself can produce bottom line benefits, sure, and also external benefits, right, for the people using it. And to just sort of cap off at some of the more interesting applications here, there is this whole process that anybody who's ever bought real estate, sold real estate, understands quite well. It's a painful process, right? It's a painful process. It's a lot of paperwork, and it takes forever. So if you have records, and I do know there are arguments that, yes, we already have records of who owns what, but obviously it is not perfect, right? So there's opportunity for some upgrades here, right? Echoing on your previous point. So having the records and ownership and title over who owns what stored on a property blockchain could really cut down on the time and the cost linked to buying, selling real estate. So,
great examples, and I think just hearing you share all of those examples, it becomes easier to understand how we may leverage this technology to apply to modern problems that have underperforming or solutions today that are flawed more significantly than this technology promises to produce. Right? I mean, anything that needs to be audited and tracked, which is pretty much anything, has the opportunity to be disrupted with this technology. Right? Exactly. That's the idea, is to be able to do exactly that. So it's really encouraging. It's really promising. And that leads me kind of into my next question. Since you have unique insight here and expertise, given your background, as if I'm sitting here thinking, if I'm a managing partner of a firm in finance or accounting, probably what I'm thinking is, all right, we're in the middle of 2022 right now, right? These technologies have been around for a few years. We see some unique applications that are doing some cool things, but what does this mean for the future of my industry, for accounting and finance? What does potential disruption from these technologies look like? And when would you expect it to happen? Is it going to happen in a matter of phases? Do you expect it to happen relatively quickly? Love to get your thoughts on that as well.
Yeah, sure thing. So what I would say there is that in terms of, how it's going to change how a firm operates, right? I would say that it is going to happen in phases, but that once the phases start, it's always going to happen faster than you'd think, right? And so part one is already underway, and it's easy to be, and it's easy to have this fact overshadowed by the headlines around price volatility, bankruptcies at some of these platforms, and NFTs, all the rest. But that ultimately, right, the actual volume of transactions using crypto is going up year over year over year. And the individuals who are most apt to be entrepreneurs, business owners, content creators, all the rest, are those exact same individuals most interested in owning and using crypto assets. So part one is already here, and part one, I found in almost every case, is having the option to be paid in crypto or to use crypto for external payments. And that's almost always part one. Part two is then normally being a part of some larger underlying blockchain. Now, obviously, right, the vast majority of firms out there or entrepreneurs aren't going to build out their own in-house blockchain, right? It costs too much and it's not worth it. But so then part two is then by being the advisor to a bank who's a part of some other blockchain, then all of us are now part of that external blockchain. And so part two then is having us have to basically train ourselves, educate ourselves and our teams to be able to understand how having some information and transactions being stored, shared, and transferred on a blockchain impacts our own internal processes, workflows, and internal audits. That's part two. And then part three is ultimately trying to offer more direct products and services, right, to our clients directly linked to their crypto asset and other blockchain-based activities. But I would say that for most firms out there, I would say that probably by the end of 2023, right, there are going to be clients of yours who are asking you questions around, hey, I'm being paid in crypto, or I'm paying people in crypto. How do I deal with this? And so then after that part one starts, it goes awfully fast.
Super well said. Yeah, the accelerating tech curve, especially when a new generation comes in or new evolution, like family of technology starts to become adopted, that is always kind of accelerated throughout. So it's an important distinction and point to make for sure. And I'm sure Dr. Sean will be at the forefront of the whole wave as well, too, which means everybody needs to learn from you as much as possible to be prepared for all of this. Sean, I can't thank you enough for being here. I could ask you questions and learn from you all day about these topics. There's so much really interesting content to cover, and there's so much underway, so much activity in this space. So I appreciate you being here. I've got a couple questions for you before we let you go. And the first one is, are there any resources in particular that you would point folks to learn more about anything we talked about here or any of the work that you do? I know you produce a lot of content, so I want to make sure that we mention that as well, too, as part of the episode.
Yeah, sure thing. So I would say that for some great external resources on this stuff, the AICPA, CPA.com, have a whole host of courses or resources, practice aids, white papers on everything that I've talked about here, from blockchain to crypto to RPA to AI. That's a great resource. And then I always publish a lot of content, but probably the easiest place to find me is at Forbes each week at Stein Smith.
Fantastic. Thank you, Sean. We'll link to all that in the show notes as well, too. And then the last question I have for you before we let you go is, who should reach out to you and how can they get in touch?
Sure. So I would say that anybody who is in the corporate accounting, corporate finance, audit, tax space, who is interested in trying to learn more on these topics and trying to get them integrated either into their firm or clients, I'm always happy to have those conversations. And I'm easy to find on social media. I'm on Twitter at Stein Smith and on LinkedIn at Stein Smith.
Fantastic. Thank you, Sean. I appreciate you being here. We'll link to all in the notes as well, too. If anybody would like to learn more about anything Sean has shared, please check that. That's affiliated with the episode. And I want to thank you for being here and sharing your knowledge and experience with our audience.
All right, Sean, thank you so much.
Thanks for listening to this episode of Accounting Automation. I hope you found it valuable. I help accounting firms scale their profit exponentially without needing to hire any additional accountants. So if your firm is in growth mode and can't keep up, I'd love to talk to you more about how I can empower your firm to do more with less through automation and technology. To learn more, visit my website, nextstep.io, or email me, Sean@nextstep.io. That's Sean, SEAN, at nextstep, NXTSTEP.io.